Bounce with me, bounce with me. Could you bounce with me, bounce with me? Yeah. Can I hit it in the morning without giving you half of my dough? And even worse if I, yeah. Jay-Z, bouncing. Obviously, the markets are bouncing. I don't often say, hey, I think the local bottom is in, but yesterday I did say that based on what we were seeing in that candle, and that has proven to be the point. I'm not calling a macro bottom. There's still so much going on in the world, but that was a very obvious place for a mega monster bounce in the market. Now, obviously, everybody is still reeling from what happened with Luna and UST. Well, one of the people who managed to escape that largely unscathed is Alex Mashinsky and his company Celsius. So he's going to be joining us hopefully in a couple of minutes, waiting for him to pop on. I know he only has a few minutes to talk about how they managed to do that and what happened there. So I can't wait to hear that story from him and then review all the news, a lot of charts today. And thank you for having patience and waiting until 10 a.m. Let's go.
Let's go.
What is up, everybody? I am Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel. And I don't know, get up and do a little river dance on the like button because you're happy today. I've never understood the river dancers, how they keep their entire upper body totally still and they move their legs like that. I've embarrassingly tried, and it's not something I can do. I cannot river dance. I also have ADHD, if you guys couldn't notice from the way that I talk here. First, before we get started, we do have Bullish as a sponsor, as you guys know, because you've obviously clicked on that link so many times. They are a institutional decentralized exchange that operates like a centralized exchange. So you get to hold your own keys and hold your own coins, but still trade with all the functionality of a centralized exchange, meaning you get order books, robust kinds of orders, basically, you know, stop losses, trailing stops, all those kind of things. And very soon you'll be able to provide liquidity there and make a whole lot of yield. So listen, guys, I know, like I said, everybody wants to talk about Luna. Everybody wants to talk about UST. Well, I have a guest today who could probably talk about that better than anyone else because he was reacting to it in real time on Celsius. Alex, thank you so much for joining again.
Hey, Scott, how's it going? Watching your show. Getting real-time updates. So, we're all feeding off each other. So thanks for having me as well.
It has been a crazy time, and I have to imagine it's been a pretty long week for you, probably short of sleep and trying to react. So listen, it's been reported. Obviously, I think I actually have the story right here. It's been reported that you guys pulled $500 million out of Anchor Protocol amid Terra chaos. Can you talk about what happened?
Well, Celsius has billions of dollars deployed across CeFi, DeFi, different platforms. Obviously, we lend to institutions, exchanges. We are the liquidity provider. So we do have assets in different locations to earn yield, right? To pay rewards that our community that's why the community is with us. And this is one of the platforms that we used. Again, we were participating in it for a while. It's not like we just found out about it or anything like that, but we had different size commitments. And again, in November, I think we in total managed about 30 billion. Now it's about probably half of that because the market's corrected. So if you look at, I know the number looks big, but in terms of our overall assets, it's actually not a very large allocation.
That makes sense. But what caused you to decide to make that move? We've seen some scary stories about retail, obviously, because there's a time frame it takes, obviously, to withdraw for people. And so a lot of people were waiting for their funds to withdraw from Anchor and such and watching price tank with little to do about it. So how were you able to identify that this was actually a legitimate problem and get those assets off?
So Celsius has a very robust risk and security team. So like our security team is 50 strong. Our risk team is almost 20 people. And so our teams are larger than most of these crypto hedge funds or protocols or DeFi guys or whatever, right? So So we just have a much more broad coverage of the markets at all times, 24/7, which unfortunately, again, the little guy can't have, right? So if you're managing your own account, even if like the two of us, we didn't sleep this week, but you still need to get few hours in. And during those few hours, no one is covering you. No one is backing you up, right? So with Celsius, that's the whole point. When you use the Celsius platform, we watch it for you 24/7. And when something's happening, when we have fear that there's something going on, and it's not just this platform, I mean, any platform, right? We take the necessary action and we move assets quickly to make sure that our funds are safe and our customers are in good shape. So, I think most of the platform out there need to beef up most of the providers out there, the hedge funds, the institutions, don't have as much coverage or the depth of knowledge that Celsius has. We went through 5 winters, right? So we weathered the storm better than most for 5 winters already. And just in the last 12 months, I think we had 2 winters, right? So, or 2 major downturns. So
we've had 1 month of summer, which was last October. The rest has basically been winter.
but to make a point here, because I think it's important, the financial markets, right? The TradFi is being tested every 15 years, right? Every 15 years we have. Last time we had a major downturn was 2008, right? So 2020, the Fed jumped in, caught the falling knife, and got all of us out of trouble, right? They reflated the economy. And this time they're not doing it, right? This time they're standing on the sidelines and they're letting whatever happens. Because fighting inflation is more important for them than saving the stock market, right? So for now, exactly. So it's important for people to understand that crypto gets tested every 6 months, right? And this is not a stress test on a spreadsheet like the FDIC or the Fed does with banks. This is real life, basically deleveraging.
Black swan event every 6 months. Almost,
exactly. Yeah. And all the weak hands are getting taken out. All of the people on leverage get taken out. And basically coins move from weak hands to strong hands. And we know after this, we know what the new basis is. So now we know 25,500 for Bitcoin, 1,850 for Ethereum is the strong support in the form of billions of dollars, right? That stepped up and bought all of that selling.
Yeah.
And that's how you test markets. It doesn't matter what you did on a spreadsheet.
That's absolutely true. So have you had any direct contact with the Luna team or with Do Kwon or any of them? Because I know that some of the funds that were heavily invested were talking to them in real time.
Well, so it was publicly published that they basically reached out to everybody, and we announced publicly that we are not involved with Luna. We have not given them any loans. We did not do these transactions unfortunately, again, look, this is a horrible situation. This is not good for the crypto community. It's obviously not good for Luna holders. It's not good for Celsius. The only people who benefited here are the people who perpetrated this, who decided to take advantage of the fact that markets were already on fire and poured gasoline on top of it and walked away with $1 billion, right? And again, the regulators, the lawmakers, the cops, of the financial community have to dig into this and see how was this allowed to happen. Because again, I think Do Kwon is a great guy, great entrepreneur, but he didn't understand when he did that transaction with his counterparty. He did not understand that he was actually giving them the fuel that they needed to basically cause all of this cascade in Luna. And it's painful. As a 8-time founder, I can tell you this is painful to watch this happen.
It's such a self-inflicted wound. It's the worst kind. It's a self-inflicted wound for him, for the market in general, and it gives ammunition to regulators, obviously, to say, hey, we told you so, right? But I know you have to go in like 1 minute. I want to ask you, when you pull $500 million out of one protocol, where's it go?
So look, it's important for us to have liquidity. We have billions of dollars in liquidity, both for redemptions. Like if our customers want to, we had hundreds of millions of dollars in redemptions and hundreds of millions of dollars in transfers in the last few days. And Celsius has accommodated everybody, no matter how big your withdrawal or your transfer into us. We can take, again, hundreds of millions of dollars. Very few people in crypto can handle that. And we can deploy it, right? The whole point is that we can provide the sustainable yield. Unlike DeFi, one day it's 10%, the next day it's 2%. Celsius provides a very stable yield to the entire community. But let me make a very important point to talk about the other side of the coin here on the stable coins, right? So it's important for your viewers, and I know you're very sophisticated viewers, so they'll understand what I'm talking about. But for the noobs out there, it's very important for people to understand that not everybody who calls themselves a stable coin is a stable coin. Just because you have some kind of an algorithm and you attach the word stable coin to it does not mean you are a stable coin. So we need to really separate. And Celsius supports 14 different assets that are considered a form of stable coin. But we group them into different buckets, right? So you have the USDC, the TUSD, the USDP, which is the Paxos coin. And you know that for every dollar that every token, every ERC20 that is issued, there is $1 sitting in a bank account in the form of cash or in the form of treasuries, right? So it's one-to-one peg, no question about it. You can redeem it at any time. And people have to understand that just because something trades at 98 cents, even if USDC trades on some exchange at 98 cents,
matter.
That means nothing. You can go
if you can redeem it one for one, that's all that matters.
Exactly. But people don't understand that. They look at the exchange, a price on an exchange, a price on Binance, or a price on FTX just means that the willing buyer and a willing seller exchange hand at 98 cents.
On that platform. On
that platform. That has nothing to do with USDC or USDT or anybody else. And it's important that people understand that, because when I see everybody in the crypto community talking about depeg, there was no depeg for USDT or for USDC.
Yeah, I had Palo Arduino, obviously the CTO of Tether, on 2 days ago, and he was just casually tweeting as everybody was fudding it yesterday, saying USDT depeg. He's like, oh, we're at 300 million in redemptions, not a drop of sweat. Like, here we are, 700 million in redemptions, no big deal. They have the cash, you exchange it.
But people, in the financial markets, right? You have these tools where you have basically a dollar pegged money markets or commercial paper systems, where they are the redemption. They both the pricing and the redemption mechanism tied into one. So people think that exchanges are the ones representing the price of a peg or a depeg. And that's where they don't understand. They need to understand in crypto, those two are two separate institutions. And it's very important for us to understand that there's three groups, right? There is the fully backed stable coins, right? That are regulated. Most of them are trust companies. Some of them are even basically governed by the NYDFS, right? So that's the highest standard in the nation, right? So again, Paxos and so on. Then you have a second group, which is the over-collateralized assets, right? So Tether, DAI are over-collateralized, and you have to look, okay, what is the collateral behind it? So people give Tether a hard time, but Tether has liquid assets that are not crypto. Compared to DAI that only has crypto assets. So you tell me, which assets do you think are more volatile? Who has a better chance?
Oh, we just saw it.
During rough times like we had in this week, who's going to have a better peg if they're over collateralized, DAI or Tether, right? So, but they're in a different bucket, right? And then you have a third bucket, which is people who just calls themselves stable coins, right? And they created this or that synthetic representation, and basically you're taking very high risk when you buy into that scenario. And again, Luna created its own little world, right? Wasn't so little. It was $50 billion of market cap that just disappeared, but it was its own world. When that bubble collapsed, it did not affect anything on the other stable coins that are either over collateralized or pegged. So it's important for people to understand that these are three completely different worlds, and bunching them together or thinking that the entire crypto industry is a mess like what happened here is just not doing justice to all the hard work we've put in over the last 13 years.
Absolutely. And what do you think happens to UST, Luna, Do Kwon himself after this, and even other algorithmic stablecoins?
Yeah, I have no idea. I mean, I'm not close enough. We obviously observers like you. I don't know any of the details better than anybody else. What we're focused on right now is just servicing the Celsius community, making sure that they can use our on-ramps, our swaps, our loans, right, our yield to rebalance their portfolio, to really make decisions, life decisions about what they're doing going forward. And every market disruption is an opportunity, right? And, Scott was telling you that, he was buying. I was buying last night. I waited as well to kind of get a confirmation, but I decided that again, this inflation number that we got was effectively the confirmation, right? All that is priced in.
Yeah,
all of that is priced in, and we're basically already had the bear market. Now we're exiting the bear market, right? It's going to take some time. We're going to have to heal the wounds, but as long as the next month and the month after inflation numbers are not higher than what was printed a few days ago, we're all going to be in great shape.
Well, I'm the comments I can say are extremely positive generally from as I glance over, and we think we need to get you on cable news to do that exact explanation, right?
Well,
the biggest fear is always
one more point that I think will clarify to people, because it's a very important point. Most people see all these news and they don't understand that they're all connected. It's all dominoes touching each other, right? So the crypto market is in distress because it's watching the stock market. The stock market is in distress because it's watching the Fed, and the Fed is watching inflation, right? So all these things are connected. You have to understand that all these things are dominoes, and they're all falling badly right now because numbers are getting worse, but they're all gonna rise back to the living when numbers are gonna get better. All of that is already priced in.
And it starts backwards, right? I just said this on CBS, but you go back to March 22, Bitcoin bottomed, the stock market bottomed 10 days later, and Bitcoin went up 17 times while the stock market doubled. Exactly. I expect the exact same thing.
Just zoom out and look at what's happening long term. Again, if you plot the S&P versus Bitcoin over a 10-year period, the S&P lost 99% of its value. Okay, already that's already happened. That's already in the history books.
And we haven't even started. We haven't even gotten started.
So Alex, I'm a buyer. I'm a buyer. Scott is a buyer. Thanks for having me, and we'll do this again.
And thanks for the extra 10 minutes. I know you're only supposed to be here till 10:10. Thanks, man. Always a pleasure. Really appreciate Mashinsky on Twitter, Mashinsky showing up to do that. Obviously, everybody has more important things to do, as I like to say, than show up on my YouTube channel and chat with me. You guys are making very funny Celsius jokes. Is Celsius a weather app? Why is a weatherman talking about the Fed? That's funny. I'm trying to go back to the comments. There was a lot at the beginning here. People pointed out, which I didn't even remember. Apparently, Rand played this on Banter this morning, that there was a clip from maybe 2 or 3 weeks ago of me telling Rand on Crypto Banter to de-risk his 85% Luna profile. Really? So listen, that wasn't because I had done the deep work on Luna or understood that it was an algorithmic stable coin necessarily that was going to blow up, although I obviously understood the risk. That was a cautionary tale of being too concentrated in a single asset that could potentially take down your entire portfolio. And sadly, I think for Rand, that is exactly what happened. And, I'm sad for him. He'll sustain it, obviously. But I'm also extremely sad. I was up last night kind of reading Twitter, which I try not to do. But I went down this deep rabbit hole of people who were threatening to commit suicide, hearing that at least in one guy's thread, he knew 8 people who had committed suicide as a result of this, people losing their houses, losing their loved ones, losing all of their possessions as a result of trusting, obviously, that this was going to play out well. Like I said to Mashinsky, people had all of their net worth in Anchor and couldn't get it out because of the delay. So there wasn't even the option to sell if they wanted to. So it was watching basically your own funeral in real time and really, really sad, man. I think that this is the worst thing I've seen in markets. And listen, I'm not like the guys I had on yesterday who were talking about experiences in the 80s and 70s, but I've been around a while. I was in college during the dot-com bubble. I was just really getting back on my feet and starting to invest during the Great Recession, and kind of got wiped out on the savings that I had just finally gotten. I've told the stories about how I went all in on a certain stock in around 2011 or 12 that ended up literally getting delisted from the NASDAQ, or the New York Stock Exchange. Like, do that. You think it's bad to watch a stable coin get delisted? I watched a stock that I was all in on get delisted. So listen, I've been through it. I get an idea of how people feel. I've certainly never been felt that level of desperation, but it's tragic. It's horrible. And, as Jeff over here is saying, it's just money, as you guys are saying. That's absolutely right. But people maybe don't see a path out when they see everything slipping away. But it is just money. It is just money. And I will say most of the people probably who had their life savings in Anchor or UST or Luna probably had just gotten that fortune, right? I don't think it was generational wealth parked on Anchor. It's probably a get rich lottery situation and then losing all that money, which is basically what happens when people win the lottery, right? So listen, I'm going to dig in a little bit more. Obviously, we talked about Celsius already pulling $500 million out of Anchor Protocol. Well, now it's fucking national news. All over the place. Hedge fund Arca says it's solvent despite blowup rumors. Their call is today. I've been telling you about the infuriating investor letter that triggered me on Tuesday. They called him Ryan Steinberg here. He's Rain Steinberg, actually a very good guy. I went to college with him at the University of Pennsylvania. The Wharton School is named after his parents, Steinberg Dietrich Hall. Rain was the founder of Wisdom Tree, and until this point, Arca has had a pretty good track record, and people make mistakes, and well, clearly this was one of them. Told you on Tuesday that when Luna started to crash, when UST started to depeg, Arca sent out specifically from him, the CEO, a letter saying, hey, we're doubling down. We've done our research. We've talked to our risk managers. This is a better investment than ever. YOLO, let's go. Right. I don't know where the hedge was in the fund. I still don't know how much exposure they actually had. Obviously there's capped exposure in hedge funds to any single asset. But I will tell you that for me, it's going to be a have fun staying poor situation on that investment, which I, like many people, bought right at the top. I invested in Arca in December 1st. The market crashed December 4th. And so they were also exposed to Axie Infinity and Ronin right around the time of the major exploit there. Hasn't gone that well. So I have to imagine that my investment there is largely vapor. And welcome to crypto. Even when you try to, listen, I invest in these hedge funds, things like this, because I want them to see things that I don't. I trust them to be better than me. And in this case, I think it was just poor judgment, and we'll see how bad that goes. Binance CEO Changpeng Zhao disappointed with how Terra handled the collapse. Yeah, I think everyone could say that. This is what he said. I'm very disappointed with how this UST Luna incident was handled or not handled by the Terra team. We requested their team to restore the network, burn the extra minted Luna, and recover the UST peg. So far, we've not gotten any positive response or much response at all. Here's the key. This is the shitty part, because a lot of people were buying Luna thinking, oh, it's at a discount, not understanding that they were printing and hyperinflating it. Some of our users, unaware of the large amounts of newly minted Luna outside the exchange, started to buy Luna again without understanding that as soon as deposits are allowed, the price will likely crash further. Due to these significant risks, we suspended trading. This is what happens when I talked about in the newsletter yesterday, the difference between buying rational fear and buying irrational fear. You don't buy something just because it went down. A lot of these hedge funds could learn the same thing. Just because you liked it before and it's now at a discount doesn't mean that the information surrounding it has not changed. People didn't realize there was so much Luna being printed and flooded onto the market. It was effectively impossible for the price to go back up. CZ saying that. And then you take a look. I woke up this morning to look at the Luna chart to see how low it was. Invalid symbol. We get the Pac-Man ghost on UST and Luna. Extremely sad. Last I checked on CoinMarketCap, Luna was trading at 0.0000037. 0.00037. Fractions of a penny. So Scott, setting all the Luna drama aside, what did you buy during the slaughter? Well, I bought a little too early on alts like 2 days ago. I bought Solana, AVAX, Elrond, Bitcoin, and Ethereum. I would have bought Matic, but I'm comfortable with the amount of Matic Polygon that I have. I was trying to focus on the things that I thought would bounce the hardest, that were the strongest layer ones, not really try to get cute. I mean, listen, if you bought like Ape or GMT or any of those today, the ones that were like doing exceptionally well before the crash, some of them are up at like 100%, right? The most interesting coins, that's worth paying attention to. Finding the coins that were like really doing well before everything crashed that you know people are dying to get into. If you're trying to, unfortunately, catch a falling knife, that can happen. But yesterday, obviously, I filled orders at 26,000 that I had put in on Bitcoin and Ethereum below 2,000. And so I was pretty much done. Like, I don't feel like rushing into anything exactly here at the moment. We can go talk about Solana. My thoughts on it, obviously, I mean, I don't think there's any stronger endorsement you can give for something besides saying I bought it and I wanted to own more of it, right? That's what I got. Let's keep going, guys. We have now, let's see. Oh boy, add to stream. Here we go. Musk puts 44 billion Twitter deal temporarily on hold. Share slide. Of course he did. Of course he did. Because he's a troll and he can troll everyone on a grand scale all at once, which is an incredible skill to have. But yeah, Musk puts 44 billion Twitter deal temporarily on hold, saying because he wants confirmation that the fake bots and users are less, I believe, than 5% of the users on there. He didn't do due diligence. If you remember, part of his bid was I'm going to skip due diligence and just make this bid $54 a share, whatever, 54.20, I think, 420.69 a share. And I'm not going to do due diligence. So now he's saying, whoa. The amount of bots in my comments, if any of you have seen it, the amount of bots is absurd. He wants to make sure he's not being fed a lie as to how many actual users there are on the platform. Let's take a look at Twitter stock. Well, got up to right where he was bidding it at 54, right? We saw this major jump on the news. It only got to his actual offer. So we'll see if he's still going to buy it at 54. It's at 40. But here's this mega gap down. You would think it would fill this gap, but actually it doesn't technically fill the gap because there's no candle. I'm reluctant to say I don't give financial advice. I would consider buying Twitter right now, right? If you think his bid's going to go through and it's going to be much higher, there's these massive gaps to fill all the way up to, I don't know, $44, a 10% gain. That looks pretty damn good. Yeah, pretty damn good. Anyways, moving on. Cardano's ADA jumps 40% to lead recovery in major cryptos. Sentiment remains in extreme fear. Okay, good. I want sentiment to remain extremely fearful. I want people to be scared here. I want them to still feel like it's panicking. I want them to feel like there's no way that the bottom can be in, right? The more optimism we start to see, the more likely price is about to go down. We need to see that optimism when price is confirmed and fully recovered, right? That's what gets us FOMO, having retail FOMO in as price goes up, driving it even higher. But yes, ADA, Cardano, obviously a darling with traders, a very passionate community. I actually had a little, I won't say a tiff with some of the ADA bulls on Twitter yesterday, but they pointed out the time that I had, what's his name, Dave Hoffman from Bankless on, and he called ADA a scam on my podcast. And I went, well, you said it, man, and moving on, kind of, and went on. But they thought that I was complicit in agreeing the ADA is a scam. I would never say something like that. Obviously, and I've open invitation to Charles Hoskinson anytime he would like to join. But listen, they have a very passionate community. They're obviously building, and we will see what happens. But what we're talking about right now is the price jump. And yeah, this looks like a massive V-shaped recovery with bullish divergence. Shocker, guys. Shocker that it went oversold on the 4-hour to 16 and had bullish divergence. Shocker, right? You never think that when you're seeing that on every single coin everywhere, basically, that you're likely to get a big bounce. Now, of course, we have potential hidden bearish divergence, right? Much higher high on RSI, much higher low. So this is we're going to see this across the board. Right now, we have signs of a reversal and a reactionary strong bounce, but no way to confirm that the bottom is in my opinion, right? No way to confirm that at the moment. So listen, this article also mentions Solana being up 25%. Bitcoin and ETH, Ape. There you go. So here. Let's take a look at Solana. They mentioned BNB as well. No bull div on Solana on the daily, but I bet there's one on the 4-hour. Monster bullish divergence. Guys, listen, I've been through every strategy. I've been an Ichimoku maximalist, OBV, believer, support, resistance, supply, demand, TD, sequential, you name it. And I've come back over the years to being an utter simpleton and saying, if shit is overbought or oversold and you see a divergence, you're going to probably get a bounce. Right? That's it. It happens over and over and over again. And people make fun of me. Oh, RSI's stupid. I don't know, man. It works. It works most of the time. What more can we ask for there? But listen, I bought Solana, like, I don't even remember it, right around here, on this dump the other day, right here. In the low 50s. So I'm about slightly up on those buys I made the other day. But yeah, I could have bought it at 37, dude. No, I couldn't have. I was fucking sleeping. Right? And I didn't want to start bidding the fallingest of falling knives. But guys, the shit's not going to zero. It's not going to zero. You know what the strategy is in a bear market? Keep buying stuff and wait. Keep buying stuff and wait. Really stressful. I know it is. It's horrible. And you probably don't have cash to buy anything right now, right? Because you're completely wrecked. So then just hold and wait. But yeah, if you add capital, the reason I always talk about having 15% of your portfolio always in cash is because you can't buy the dip if you don't have any money to buy that dip with. Really hard to buy the dip when you're not in cash. The other benefit of having at least 15% cash in your portfolio is if you're trying to stack sats, you're not looking at the dollar value as much. Every time Bitcoin drops, the dollars or USDC or whatever in your portfolio behave like altcoins that are outperforming Bitcoin, right? If Bitcoin drops in value and you're holding cash, your sat value of your portfolio actually goes up. Bitcoin going down, you don't lose Bitcoin, you lose dollars. But your dollar buying power of Bitcoin increases, therefore increasing the Bitcoin value of your portfolio. Get it? Get it? Sweet. Explain V-shaped recovery more. We'll get there. There's some coming up. Here's BNB. Wow. BNB almost went to the range lows at 211. Absolutely astounding. Monster bounce. Look at these candles. This is the strongest volume you see on the chart going back to May of 21. Monster capitulation, massive wick down. This is what we've been looking for. I've been talking about it over and over and over again, right? But still below resistance. But this is what you want. You want a big candle down. Oh, fuck, we're done. Massive volume and bulls stepping in. And then you want to see bullish confirmation on the close the next day. That's what we're looking for now. This is everywhere. It can completely fail, but this is a market bottoming capitulation bullish pattern, period. No argument, debate. Now, technical analysis doesn't always work and it can completely fail, but nobody can look at this and be like, that's a bearish situation. This is a bottoming pattern, classical charting. It is what it is. Not my opinion. Not my opinion. The thing is that technical analysis doesn't work a lot of the time, right? Ape, you want a V-shaped recovery? First of all, guys, last week, I think. Last week? Yeah, last week I drew this head and shoulders on the live stream. Someone asked me to look at Ape. I'd never really looked at Ape. And I said, wow, the target of that is about 690. I don't necessarily see that happening. Oh, shit. Taste the rainbow. Look at it. It went deeper. It went to $5.14. It was at 690 was the target of that head and shoulders. Gratuitous clear head and shoulders. Retest as resistance right there. Dumped. But look, V-shaped recovery. Look at that. It is $5. It's doubled off the lows. By the way, if you bought Coinbase at the lows, which everyone's shitting on all over Wall Street, 41 bucks yesterday, you've made more than 50% of your money today. Today. Suck it. Suck it, haters. Anyways, this is a V-shaped recovery, right? When you retrace the entire move. And what generally happens here? This is potential. This is just an idea. So I'm not saying this is going to happen, but usually you look for an inverse head and shoulders, right? You get up here to where like this resistance would be right around 10 bucks, 20 maybe, but it can slant. You hit this resistance. Obviously, there's a lot of sellers who were trying to get out. You get a bit of a retrace, and then you get volume exiting, and you get an inverse head and shoulders. You basically flip the exact pattern that you're seeing on the top. Right? Right? Same thing. Same thing. Other way. See it $27. I'm not saying that. But yeah, same thing. Other way. V is for vendetta. V is for vagina. V is for victory. And V is for recovery. Look at GMT. I own Steppen. I do not own Ape. I own Steppen. I have not gone a Steppen outside into the steps, but that's a V-shaped recovery. It was 80 cents. It's more than doubled off the lows yesterday. 100%. If you caught it at the low. Nobody caught it at the low, right? If you caught it here, the next day open, 90 cents. You're almost double. So maybe we get the same kind of thing. Run into resistance, retrace, whatever. Coinbase stock jumps nearly 9%. Ooh, I just showed you it's a little bigger than that, bitch. Whipsawing amid crypto crash. Yeah, it's been all over the place following a rocky week. Obviously, they had that sort of FUD where people read their earnings and said, and there was this line, if you guys didn't hear about this, that said, if Coinbase goes into bankruptcy, users' funds that are in our custody could be a part of the bankruptcy hearings. Huh? What? What'd you say? Excuse me? Yeah. But then Brian Armstrong quickly clarified. He said, we're putting systems in place. The law would not necessarily do that. This was a disclosure that we had to put in there. We're fixing it, bro. Chill. Right? We're not going bankrupt, and we're not taking your money with us if you do. But that caused a lot of extra FUD and sent price absolutely down. Am I, you know how I view my Coinbase bags? Bought the first day first, but at the bottom. 320. I bought all the way down, right? My last buys were $50-ish. All the way, because I believe in this as a 10-year investment. But like, you ever seen the movie Titanic and the diamond, and it goes all the way underwater and it sits there forever and it's totally underwater and sunk in with all the bags? That's me. But they're going to discover it. They're going to discover it. But the only thing you have to hope is that when you discover the diamond and it's no longer underwater and it comes back up, that some old hag is not going to throw that shit right back to the bottom, because that's what happened in Titanic, and that's dumb. I hate that movie. Go cash in. Give it to charity. I don't know, like, give it to your kids. They're going to go do crack. But, like, it's so dumb. So I'm hoping that Coinbase comes back. I'm not hoping then that we get more FUD and they throw it back underwater, because I, sir, only have so much oxygen in my scuba tank. Where the hell are we? What am I doing here? This is all out of order. Nomura starts trading crypto derivatives, joining rivals Goldman and JP Morgan. If you guys don't know about Nomura, they're over in Japan. And they carried out Bitcoin futures and options trades with derivative exchange CME Group and crypto market maker Cumberland DRW. Isn't that the place you get cheap shoes? Yeah, over-the-counter cryptocurrency derivatives with Bitcoin non-deliverable forwards, non-deliverable options for clients in Asia out of Singapore, according to an email statement from the bank. You can't even say all of that in one breath because it's so complicated. Basically, they let some of their really richy folks in Singapore do some Bitcoin trading, right? That's cool. That's cool. And then in final news, this Giga Chad of epic mega proportions called Sam Bankman-Fried, the savior of us all, praise him, bought a 7.6% stake in Robinhood. And people like this guy so much that Robinhood stock went up 30% after hours. Yeah, right after hitting an all-time low. He'll save us all. He's going to probably save it. DSW, DRW, DVW, whatever, man. There was a D and a W, and I like it. Yeah, praise be. Praise be. Blessed be the fruit. Sam Bankman-Fried. Blessed be the fruit, for sure. Yeah, Robinhood sucks, but maybe Robinhood will suck less. You ever think of that? Did you ever consider that? Dude, 420, like old school digital clock is your avatar. So, like, do you do the pots, bro? Pass a little doobie. Smoke a little of that shisha. Is that the company that stops regular people from trading? No, that's Coinbase. Yeah, Coinbase goes offline every time there's volatility. But yes, Yeah, listen, Robinhood, it sucked what happened with GameStop last year, but most people don't really understand the mechanics of that. They had to turn off the buy button because they didn't have enough money to fill the orders. That what happened on Robinhood, and yes, it sucks, and yes, you can blame them, was a function of a broken system of how clearing happens and how stock orders are filled. If you, as Robinhood, fill someone's buy order on GameStop, you have to wait 48 hours for it to deliver, which means that you have to put up the cash for that buy order 48 hours before it's actually delivered, meaning that every GameStop buy order that was coming in, Robinhood had to have just a few casual $1 billion laying around to fill those orders. They couldn't. Sucks. It's a broken system. I'm not saying it's not trash. It might be trash, but that was not necessarily their fault. I don't use Robinhood. I don't give a shit. I don't give a shit. I don't give a shit. Let's look at Bitcoin. We didn't even look at Bitcoin. Oh, that chart. That chart gets you, you know? Just waking up in the morning, gotta thank God. I don't know, but today seems kind of high. No barking from the dog, no smog, and mama cooked a breakfast with no hog. Today was a good day, man. I even saw the lights of the Goodyear blimp, and it said, "The wolf's a pimp." Don't quote me on that. That shit's corny. Ice Cube. It could be a dead cat bounce. Could be. But right now, this is what you want to see. Like, stop overthinking it. This line is the 2021 June crash low. We broke below it, held it, and closed above. Massive wick, massive volume, closing above the most key support that exists on the chart. Below this is 20K. There's not a single support, really, back to 20K, which was the highs of 2017. Right there. This is not support. This was a elevator up. We want to see 28.6 here on Bitstamp. It's 28.8 on Coinbase hold. This is what you want. This is it. This is a bottom. I'm not saying it's the bottom. I don't know. It should be a bottom. Massive volume. Biggest volume way now dwarfing December 4th when it went from 53 to 42 in like an hour. Right? Way dwarfing that volume. That volume is not even as big as the volume the day before this volume. Pump up the volume. Pump up the volume. Don't that bass. Thinking of a master plan. Got nothing but sweat inside my head. But yeah, listen, holding this support, bouncing off it and testing it exactly today with a long-legged doji down, major volume, and the confirmation of this candle would be any green candle today. It's what you want. What you want. 20 weekly moving average. Yeah, but let's take a look at the 20 weekly exponential moving average. Move 200 MA has not been tested. This is the EMA, 26,848. Tested and bounced. Let's see the other times in Bitcoin's history we've tested that. March 2020, look at those wicks. Two massive wicks below, both held as support. Never closed a candle below. We've never closed a candle below it. And listen, to get a 200 weekly MA, you need to be trading for 200 weeks, 200 candles, a long time. So Coinbase doesn't even go back to like 2014 with the history. Right here, 200 EMA. Never closed below, bounced right off it. It's tested it 3 times. This is the third. To give you an idea of how much a reversion to the mean that move was. Right? That's a massive retest. Imagine if this candle closes above 33. My God, spontaneous orgasms for all. Just, they will be uncontrollable in the street, in the car. Imagine if that was a massive, but all we want to do really is see a weekly SFP below 28.8. I explained this in the newsletter. You guys should read it. I'll explain it very quickly what a bullish SFP swing failure pattern is. These happen on the top 2. Here's the very quick explanation of why this matters. First of all, people try to identify SFPs on small time frames. Not a thing. Not a thing. Swing failure pattern. What does that mean? When whales want to fill orders in a nascent market that does not have enough liquidity, they have to push price intentionally to a place to engineer that liquidity, right? So if you're looking at this chart, you're saying, oh, well, there's not much buying here. This broke, not much buying here. So it wasn't below 33. Where does price need to be to fill a whole ton of buy orders? That's why 1 million people were interested in Bitcoin at 28,600. That is the low for like the last year-ish, right? So what happens? The whales who want to buy keep this in mind. They want to buy, but they need to fill a tremendous amount of orders. They sell the shit out of Bitcoin to find that liquidity because they know they're going to buy lower. So they're the ones who sell this to engineer the liquidity. Now, how do you get that liquidity? You want to buy, keep in mind. So what happens when you hit a very, very key major old support on the chart? Two things. A shit ton of people go short, right? They see below 28.6, they see it break, they see the candle going below, they say, I'm shorting this, it's breaking support. That is a ton of sell orders. What else happens? Anyone who is long from up here has their stop loss within 2 or 3% of that line. It's breaking support, I'm stopping out. What is a stop loss on a long order? It is a sell. So you push price to a place where all of these sell orders trigger at once. You buy the hell out of it. Price bounces, closes above that level, and the rocket ship commences. And I was saying this looked like a bottom before we got that confirmation it happened, just based on what I saw on the 4-hour chart, the insane volume on the 4-hour chart, right? This happened, didn't close above, it wasn't even an SFP, but this candle on this volume on a low time frame was a very good signal. So listen, now maybe we do exactly what I was showing you on that other coin, right? Maybe we get a little boop, 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 something like that, right? I have no idea. You can only do, listen, you cannot, like, if you take your bias out of it, you can only look at the chart and see what happens. Now, the question here remains, what happens now, right? 4-hour, we had bullish divergence from RSI at 11. Come on, guys. Come on, right? But now we have a lot of hidden bearish divergence. Potential, excuse me, right? Sorry. Like, we got to get above these kind of levels here, or we're going to have higher highs in RSI and lower highs. But that doesn't, it's not even a concern right now. Why? Because RSI is pointing up. All it needs to do is keep pointing up. You don't want to see a massive elbow. And here, even you saw an elbow. This could have been considered, I don't think that's elbow enough, a hidden bearish divergence, but it came right back and tested support. But you're going to see that potential hidden bullish bearish divergence every time on every time frame, right? That's a 12-hour daily potential hidden bearish divergence. But all it's got to do is get above 31,000 on the daily and close, and we are clear sailing. Clear sailing. Yeah. This is how whales trade, guys. They go find the liquidity. And you want to be that little fish that's sucking on the back of the whale, right? Riding that whale. You don't want to be the fish that's getting eaten. Ride the whale. Don't be in front of the whale. That's all we're trying to do here. What's stocks doing today? Bouncing like a motherfucker. If only there was someone out there who kept saying that yesterday looked like the bottom, that we've been in a major irrational panic, who went on TV, on NASDAQ, and put his balls literally out on the camera and said, here's my balls. I could probably be wrong, but I'm calling this a bottom before yesterday was over. Yeah. I have no idea what's going to happen, but this is as good a chance you have to have rolled the dice as ever. That's it. That's it. I'm exhausted. Fuck this week. Really. What a roller coaster, man. Watching people lose their life savings on complete garbage that they were sold by the biggest money in the world, unable to get their money out, watching the whole market crash around it, watching stocks crash around it, watching everyone go into a full depression. If you can avoid feeling that way on Friday the 13th, if you can avoid feeling that way and remain calm, you will realize that whether this is the bottom or not, it can't go down forever. And this is when generational wealth is made. If you have cash on the sidelines, if you have the balls to buy and then turn it off and wait a really long time. As I tweeted yesterday, we all know it, and so many people responded that they did it yesterday. You'll buy an asset that you love. You'll hold it for months, years. Buy Bitcoin at 65,000. I believe in it. It's an inflation hedge. I believe in the technology. I believe governments are bad. You hold it. And then one day you wake up in the morning, you casually walk to your computer and you go, I've had enough. And you sell. And it's always the bottom or near, right? because you just can't take it anymore, that's when it reverses. A guy responded. He was like, I did that in 2008. He was like, literally the last day of the crash, I sold my entire IRA 401k, had my mom do the same, and it went up. I'm not telling you to buy anything. Do whatever you want. Your finances are your problem. Every one of us is in a different situation. You can't do what I do, and I can't do what you do. And I have no idea how much money you're risking or any of those things. But the reality is, this is not the highest Bitcoin will ever trade again, or any of these coins. We'll make new highs. That's what markets do. You just got to be able to wait. Just got to be able to wait. Guys, that's all I got for you. I have a lot to do, and it's almost 11 o'clock. Damn. Guys, it's been a pleasure. I really appreciate you once again hanging out with me for the week. Oh, first of all, subscribe to the channel. Subscribe to the channel. Do that. Check out Bullish. But in the description is a link to my very, very, very free newsletter that used to be a paid newsletter until April 1st. And then I decided I don't want any of your money ever again. Ever want money from any of you ever again. I'll take it from sponsors. I don't do sponsored content. I just put sponsors on the show. I don't want your money. And now, not only do I not want your money, I'm going to give you guys money. All right. BitGet's probably going to jump in on the action. They're the newsletter sponsor, but I'm personally going to give away. It's the 500th issue of the newsletter on Monday. So I'm going to give away $500 to 10 people, $5,000. Don't know how we're going to roll it out. We're just going to go. All you have to do is be subscribed. You don't have to do shit. You don't have to like go tell people that I'm nice. All you have to do is be a subscriber, and we will randomly pick 10 of them to win $500 each. That's it. That's it. Why? Because I've written 500 newsletters, and I feel like celebrating because that's been a monumental undertaking that's taken the better hours of my life for the last 3 years. So whatever, man. Subscribe to the newsletter. I recommend that you listen back on my live streams from the last couple of days, not because of me, but yesterday with Scaramucci and Matthew Rozak and Mark Yusko and Dave Weisberg. Man, I just sat back and listened. That was some genius conversation. Of course, Palo Arduino, on Wednesday, and Mashinsky today. Go back and listen. It's great. Also had a podcast yesterday with Zuby that's pretty epic. You guys should check out. That's it, guys. That is it. I will see you all soon. I will be back on Monday. Oh, and also I was just on CBS News right before this. That's why I was late. Sorry, I didn't tell you that. Sorry, I apologize. I was late. But anyways, bye.